Live. I'm Tanya Anzalone, and I'm an enrolled agent with the IRS, and I'm also the Member Experience Manager for Stride's tax product, Stride Tax. The Tax Cuts and Jobs Act is the biggest tax reform we've seen in the last 30 years. Last time we had tax reform was in 1986, and this past tax reform was at the end of 2017. There were a ton of changes that came with that tax reform that will affect all Americans, as well as self-employed individuals like most Stride members. We're going to go through all of those changes in a series of 3 Facebook Live videos. Today I'll be focusing on changes to deductions and what those might mean for you if you're a self-employed worker. Be sure to like this broadcast and share it to all of your self-employed friends in your industry so that they can hop on and get ready for the April 15th filing deadline and feel really prepared to start filing your taxes. And if questions or comments come up, you can comment your questions on this Facebook Live and we'll drop in an answer after we're done with the broadcast. Also tune in on Thursday and next Monday for our second and third segments of this series, where we'll cover tax brackets, child-independent tax credit rules, and a couple details on the Affordable Care Act as well. And once again, feel free to comment your questions at the bottom of the broadcast. So the first change we're going to go through is the change to the standard deduction. So for those of you who don't know, when you're filing your taxes, you're trying to find your taxable income number. You go through a little bit of math to find that number because that's what you're going to pay taxes on. So when you file your taxes, you're listing your income and your deductions. And once you list your deductions, you find your adjusted gross income. And when you go from your adjusted gross income to your taxable income, what you're doing is you're either taking one flat deduction off of your adjusted gross income, called the standard deduction, or you're listing out your itemized deductions, which is a list of very specific deductions that you can take on your AGI. So the standard deduction in past years has been in the ballpark of around $6,000 for a single filer and about double that for married filing jointly filers. There's a specific standard deduction map for each filing status. The deduction was supposed to go from $6,350 in 2017 to $6,500 in 2018. But because of tax reform, that standard deduction amount is going up to $12,000 for a single filer and double that, $24,000 for married filing jointly filers. So it's going to be a huge increase to your standard deduction, which means it's going to lower your taxable income even further than it would have normally. That means you're paying taxes on a smaller amount of income, which can really help you save on your tax bill. I know that was a lot of math that I just threw at you, so if you have questions on that, feel free to comment on the bottom of this broadcast and we'll answer your questions. So a couple other changes we need to go through are changes to your itemized deductions. So remember, those are the deductions you can take instead of the standard deduction if you choose to. It includes deductions like charitable contributions, medical expenses, casualty losses. So if your list of those deductions are ever bigger than your standard deduction, then you should definitely itemize your deductions. So a couple of those deductions that went through some changes with tax reform include charitable contributions. So the limit on how many charitable contributions you could deduct used to be 50% of your adjusted gross income. So any charitable contributions that were bigger than 50% of your AGI, you couldn't deduct. And because of tax reform, that limit has been raised from 50% to 60%. So 60% of your adjusted gross income, that's what you can deduct in charitable contributions now. Another change came to medical expenses. So typically you could deduct medical expenses that were unreimbursed that were over 10% of your AGI. Because of tax reform, for the first 2 years of tax reform, you're going to be able to deduct your medical expenses that are over 7.5% of your AGI. So the threshold for being able to deduct those expenses is a little bit lower for the first 2 years. And then afterwards it'll switch back to that 10% that we're used to. Another change came with state and local taxes. So typically you could deduct your state and local property, income, and sales taxes on your tax return. But because of tax reform, you can only deduct those state and local taxes up to $10,000. There's a limit on that deduction now. Home mortgage interest, you can deduct your home mortgage interest on the first $750,000 of your mortgage debt, when previously that limit was at $1 million. That change only comes into effect for loans that were taken out after December 15, 2017. Another change was with casualty losses. So previously you could deduct the cost of damage to your personal property due to theft or natural disaster, fires, what have you. And now you can still take the deduction if you are in a federally declared disaster area. So now you have to be in a federally declared disaster area to be able to deduct your casualty losses. you could expect a federally declared disaster area to be a result of hurricanes, fires, earthquakes, what have you. And the final change is to moving expenses. So I'll note that this isn't an itemized deduction. This is just a regular adjustment to income that everybody's eligible to take. Moving expenses you used to be able to deduct if you were moving locations for a job that was over 50 miles away from your previous workplace. And now, because of tax reform, that deduction has been taken away. So if you ever move for a job, you won't be able to deduct your expenses for moving, like lodging, shipping costs, a percentage of your mileage or your vehicle costs as well. Thanks so much for joining us for our first video in our series on tax reform for self-employed workers. If you found this Facebook Live helpful, be sure to like it and share it with your friends who are self-employed. If you haven't already liked Stride on Facebook, do so now. That way you'll be notified the next time we go live with more tax reform information. Be sure to join us on Thursday and Monday for the second and third parts in this series so that you can be well prepared for tax season. And if you're looking for more tips and guidance and a recording of this Facebook Live, you can follow us on Twitter or go to our blog, and where you can find articles on all of the information that we discussed today. And you can also find more information in the comment section below.